Welcome back to the Investor Professor Podcast. This is Dr. Ryan Peckham, and this is episode 158. On today's episode, I'm once again joined by Cameron. We're going to discuss Deepseek and how it rattled the markets on Monday. We'll talk about company earnings. We'll talk about the Federal Reserve meeting. We'll talk about Trump's tariffs. And we're also going to discuss characteristics we feel hinder people by self-sabotage. So that's all on this week's episode. Get your mind right and let's get to work. Well, welcome back to the program, everybody. Cameron, happy Friday to you.
Happy Friday. Happy crazy week in the market.
Crazy week, man. So we start off Sunday night. We got Deepseek. I woke up at 5:30 on Monday morning, and the futures for the Nasdaq were down 1,100 points.
Your spider senses were tingling a little bit?
Well, I was wondering, Sunday, I always check the futures. So Sunday night I looked, and they open at 5 p.m., so 6 Eastern. And they were down 245, and I couldn't figure out why. I couldn't really sense. And then I saw some of the Deepseek stuff, and I was like, okay. And I woke up, and I looked at it. I was like, oh man. Mm-hmm. I had flashbacks to COVID. That's literally. So Monday was the worst day for the Nasdaq since COVID.
Oh, I didn't know that.
Yeah.
Wow. But was it in the red, the futures market, before the news dropped, or did it react? The futures react.
It happened overnight. So Sunday night I saw them, and then I guess overnight it reacted, and it was just man. But the one thing if COVID taught me anything, it's you do not sell into a sell-off.
Yeah.
Normally your first reaction is going to be wrong. Mm-hmm. And they actually they actually got better over time, even though it still ended up being pretty bad.
It's funny because then you had the next day on Monday, CNBC, a bunch of people talking, well, this isn't a sell-off. This could be the hole in the boat. Just wait for the second hole.
Yeah.
And it's all right, way to just drive the fear monger up. You know what I mean? Well,
it's again, we've talked about this many times, but it's amazing how much the market is
reactive,
but also just driven by fear and greed.
Oh, 100%.
Fear and greed,
Well, yeah. Who do you think was selling? That's actually, who do you think was selling?
Maybe other markets, maybe the European market. I'm sure there's some, U.S. traders that are up. I'm sure some stop losses were triggered.
Yeah, that's a good point.
There's been a lot of leverage that's been in the market. So all of a sudden that gets, everybody focused on the tech stocks, Nvidia coming down and Broadcom and those. Mm-hmm. But what was interesting was the data center stocks, which I actually have not been too exposed to, but the GE Vernovas, the electricity kind of stocks are the ones who got really, killed. And now we're sitting here doing this on Friday. Many of the stocks have recovered. Nvidia actually hasn't. A lot of stocks actually had come back. And then, 2 hours ago, Trump starts talking about all the tariffs he's going to put on tomorrow. And so our good day today gets washed out,
Yeah. Why? What do you think the sell-off told us on the sell-off on Monday? Not today. We'll get the tariffs, okay. But just the idea of oh, wait a second, this company did it for whatever the imaginary number was, 6 million. Maybe,
right,
you know what I mean? That whole idea, are we being excessive? What do you think that sell-off told us?
I think it tells you how nervous people are. And again, going back to having 2 really good years and everybody being one foot out the door of is there going to be a correction or whatever. But also I think it's a nervousness of our company spending too much in capital expenditures. So CapEx, how much are they spending to do these data centers and those kind of things. And then it's also is that company being truthful in how much they actually spent? But I have been thinking about it all week about Nvidia being sold off because they didn't have to use as many Nvidia chips. And it perplexes me because I'm okay, but they still use Nvidia chips. So why didn't AMD sell off really hard? Because the valuation of Nvidia actually is not it's not that bad. I mean, like
to the forward earnings, you're saying?
Yeah, based on their forward earnings. And obviously the forward earnings could be not as much as people expect, because if you don't need as many NVIDIA chips, you would dial that back. But I still think we're a ways from that. I really do. I still think we're probably, everybody always wants to use innings, but I think we're still pretty early stages as far as like the build out that's actually going to occur, because they're talking about, or they discussed like, okay, they basically made a mirror of ChatGPT, but it's like, I think about all the other applications, which would be like self-driving cars and just all the other things that they're going to be doing.
Yeah. So you made the comment about it's close to ChatGPT. That is the one thing I was thinking about, is how close really is it? I haven't yet to try it, the app. And the reason being is because the terms and conditions are aggressive. Like if you compare it to like TikTok terms and conditions.
Wait a minute. Are you the one person that actually reads the terms and conditions?
I do not read it. I put it in the Copilot and it summarizes it. I'm just joking. No, but there's so many posts on it. I mean, there's articles on it. People have read it all, but that it gets access to your email, like, people don't think about that stuff, right?
Firstborn child.
Yeah, exactly. Yeah,
right.
Yeah. And people don't think about that, but to me, that's kind of a little worrisome. So I didn't try it. But from what I was reading from the people that did test it, there was what they call hallucination, a lot of it, where it's like you ask it a question and it will make something up on the spot.
Yeah.
And it's not the right answer.
Right.
So, when you compare that to, I remember when ChatGPT was like that back when I first started using it. This had to have been November of 2022.
Okay.
Like when it first started coming on the scene a little, I think it was 2022, but we've kind of outgrown that with all the other software, all the other AI applications. And there's not going to be a long line of people that are going to sign up for, our long line of companies.
You can really get like tinfoil hat here. And thinking about like conspiracy theories with like, okay, the U.S. bans TikTok, and then all of a sudden this app's ready to go. Like the timing seems a little bit, but I think that as AI and all these things evolve, I think about like, they're already working on. So that was like ChatGPT 1, and they found out that like Deepseek has all the same flaws that ChatGPT 1 has. Like all the errors are the same. And so it's almost like a mirror of it a little bit, but it's also, they keep talking about how like the next generation of, I think if you want the pro version of ChatGPT, it's like what, $200 a month,
something like that.
And then like, if you want like the pro, like, well, they're talking about the next one could be like $2,000 a month.
Yeah.
But I'm thinking like,
why?
Yeah, but I'm thinking already like, how much, like they say you use 10% of your brain. I probably use like ChatGPT for like 2% or whatever. I think that like the normal person who's not like a tech insider, like you're probably already using like ChatGPT to like a tenth of what you could be using. Like somebody's going to have to come along and show you like all the things that you can actually do with it, I feel.
Yeah.
Did I just old man myself? Is that what that smile is telling
a little
me?
bit. I'm not going to lie. So when you said that, here's what I envisioned.
Yeah.
Is, you call it to your son or daughter, show me how to do this, because they learned it from TikTok or whatever.
Right.
That's going to be the education for the older generation,
Right.
I think. Yeah. Right. But you're totally right. And it's not so much about learning. There's two aspects to the growth for stuff like this, or for tech. And this is different for consumer versus business. So we're just going to talk consumer right now, right? Because that's what we're talking about with the subscription. There's market share and there's mind share. I can pay $200 for it, right? So they're going to count me as part of their market share, but do they have my mind share yet? And my mind share being like use case wise, I can go about my day and look at the certain things that I'm doing as use cases and apply that into AI. And that bridge between the two is really hard to be done. Right. Because people are so ingrained to their habits, but when they get that mind share, I think that's going to be different. I think that's really going to drive a lot of their growth. So
of course, you think about Microsoft, there was programs before Microsoft, but Microsoft made it easy because of the Windows and all that. Apple did the same thing with the App Store. I mean, somebody is going to come around and they're going to make it easy. And it might be one of these companies, but they're going to make it easy where it's like a seamless integration.
What needs to be done? How's that done most successful, you think? And let's talk consumer right now, because there's two very different markets when you compare consumer to a business.
I don't know. I don't think I'm know enough to even like be able to answer that. Like, it's like now Microsoft, when I'm using Microsoft products, they ask me all the time if I want to try Copilot out. So I think they're gonna have to do some stuff where it just educates people on like what can it do for me. Does it make the reservation? Like if I say, hey,
they do that now.
Like, hey, open up my open table and make a reservation for me. I mean, like, what, is it basically almost like a personal assistant? It's like Iron Man with, what was his name? Jasper? I don't know. I can't remember his name. But he's like, where it's basically doing stuff for you.
I know what you're talking about. Yeah.
But you know what I mean? Like it's like almost like a digital, like a real assistant.
Yeah. That's going to bug me now. But I think there is. Microsoft's doing a great, they're trying. They have these different, events that they put on throughout the year. I've attended a few of them virtually.
Oh, Jarvis,
that's it. I've attended a few of them virtually where they try to go over use cases, but they definitely try to really gear it towards enterprise, because honestly, let's call a spade a spade. That's where they're going to make a lot of their money.
Of course.
Right?
Because consumers are used to getting things for free.
But what do enterprises care about? Do they care about adoption, but what do they care about more than that?
I don't know, efficiency.
I think it's going to come down to data. Like,
oh, right. Yeah.
Because if you look at it, like certain companies are very particular, and Mark Benioff is trying to shake the industry up a little bit right now by going against it, but very particular about, do we control our data, or are you going to be in the car with us?
Right. Because
if you're going to use our data, then we got some security problems that we need to figure out. Right. Mark Benioff has been saying, you don't need to, come up with your own models. Right. Just get in the car with us, where most companies are saying, no, we want our own data. So that's Copilot. That's Microsoft's stance, is like, your data is your data.
I don't know. We'll see. We'll see how it evolves. I mean, it's kind of the Wild West. And so this is kind of how it was at the beginning of the internet and all that. And everybody's always afraid that like the AI stuff is going to be the internet tech bubble like it was in 2000. I think it's different. I mean, these companies are actually making money. Doesn't mean their valuations can't get stretched. Doesn't mean they don't need to be, put in, checked a little bit. But I think if you're willing to invest in some of these companies for 3 to 5 years, I think you're going to be okay with NVIDIA at $120 a share.
100%.
We'll see. I mean, we'll see. So then we have company earnings come out. We had Microsoft report this week. We had Meta report this week. Meta, man. And then we had Apple.
Let's talk Meta.
ServiceNow. I mean, Meta. So Meta grew their revenue. So their sales grew 20%, but their profit grew 49%.
Yeah.
I mean that is like lean, mean, and we're showing you like flexing muscle on profitability.
I don't think it's going to stop.
Pretty incredible.
It's not going to stop, I don't think.
Yeah, and Zuckerberg, man, just sounded like what happened to that guy, man? You tell me, you're the young guy. I mean, he went from robot to like, I'm growing my hair out, throwing a chain on it. I mean, like flexing his muscles. I mean, I think the octagon, I think he's like, the fighting or whatever, like gave him confidence in the boardroom.
Yeah. So I've done some digging on this because I've been curious myself, because everyone's seen the Joe Rogan interview where he talks about how he's going hunting now and bow hunting and stuff like this. And it's like, dude, that's a different guy than you were a few years ago.
Right.
But some people take the stance of,
did he finally figure out he's a billionaire and he doesn't have to,
well, he bought an island and now he hunts with a bow on it. So yeah, he's a billionaire, but let's not make sure he can't lose his mind. We can't let that happen. Yeah. But a lot of people, well, not a lot of people, but there's a perception that he's becoming more into himself. Like he's becoming a little more comfortable.
He's coming into his own.
But so I brought him up and I was talking about him today, Chamath Palihapitiya.
Oh, here, okay.
So this guy, I know, I got a bro crush. He was their head of growth at Facebook. He was Mark Benioff's, or not Mark Benioff, I'm sorry, Zuckerberg's right-hand guy. He was the guy that drove a lot of the growth for Facebook when they first started. So they're close. And not so much anymore because, Chamath has made a few comments about Facebook, but he was talking about on a podcast recently that Mark is great at being a chameleon. Like he knows how to show up in a certain light when when it's called for.
Right.
And you went from Trump's book talking about how he's going to throw Zuckerberg in jail if he doesn't act right.
Right.
And then Trump comes into office and all of a sudden, he's giving $1 million for inauguration. He's coming by and saying, hello, I'll stand right next to you when you get inaugurated.
Yeah.
Right.
Yeah.
So kind of a chameleon. I'll say he's kind of a chameleon, but he's doing a lot of things. Like he has Dana White on his board now, which is announced, or he welcomed, he did something where he's good friends with Trump. Yeah. So it's kind of like now you got Trump's best friend on the board.
Yeah. And you can't argue with like the way that he's made, Meta so efficient financially
and diversifying his revenue streams.
And man,
done it well.
Yeah. And I'm telling you, you look at their financials. I mean, they are so clean.
Yeah.
So clean.
Why do you think that is?
They've always done a really good job of keeping like their debt in check and things like that. But I mean, their financials are amazing. I mean, they really are. So, I mean, they're just kind of looking at that, even though they're spending a lot of money. That was the other thing. That was the one thing that you and I talked earlier this week. Last week on Friday, before Deepseek came out, previously Meta had said they're going to spend $50 billion on CapEx this year on AI infrastructure. And they came out last Friday and said, we're going to spend, actually that was low. We're going to spend 60 to 65 billion. Deepseek thing comes out. Everybody's freaking out about people not buying as much, data centers and hardware with NVIDIA. And Meta stock went up. Yeah. Like it was down early. It was down pre-market, but during the day it came back. So it's just interesting, but their quarter was clean versus like a Microsoft who Azure's not growing as fast. I mean, it's still growing pretty good, but I mean, Microsoft's still not great. Apple came out good quarter on. Everybody was so worried about the Chinese, the China sales, which were not great. They dropped 11% versus this time last year. So the China market for them is still struggling. But man, I'm telling you, sneaky. The service. Everybody discounts the services revenue. They have 1.3 billion iPhones in circulation, and man, that service revenue is not stopping.
Yeah. Do they discount it? Because same as you, I got CNBC running in the background, and I think they just, I guess they do discount it. Because I'm thinking of the verbiage I hear. Well, services, like I heard analysts say, well, services is going to be good, but that's expected. And it's like, well, hold on. When did good growth in revenue just become an expectation and a flat zero? Like this is bare bottom, like it needs to be.
I mean, they're making $23 billion a quarter in services.
Yeah.
Just me paying for extra storage. Just all the things that come with just owning an iPhone. I mean, like that is, you sit there and you look at that. That's $92 billion a year. Mm-hmm. That is, like, I don't think most investors realize that just the just how good that is for just a normal company. And that's just one area. I mean, their Mac sales were better. Everything was basically better except for iPhone. And I don't know, something else. I mean, was a little bit light, but I think is, AI. And the other thing too is they're not having to pay for all the AI stuff. We keep talking about all the companies and how much money they're spending on AI. Apple's not. They spent $100 billion buying their own shares back.
What is when they're not paying for their own paying for the AI? What does that do for them, you think, in the AI market?
Well, they basically go to all these other companies and say, if you want access to our customers, you'll give it to us for free.
Yeah. It de-risks them a ton.
Well, who was not down on Monday?
Apple.
Apple wasn't.
So yeah, I see that starting to play out because Apple's kind of sneaky conservative. There's some companies that are very conservative in the sense of where they invest their time and their money. And that can be almost to their own detriment, especially in times like this. But Apple is conservative, but they're conservative. They're efficiently conservative, if that's a way to say it. You know what I mean? Like they're still in the game, but they're they're minimizing risk because they're just taking advantage of the position they're in. And,
well, they
that's
honestly
not bad.
it's almost like you're letting people fight it out, and then you're just going to come in one day and just acquire somebody, or you're going to see who, and then you're just going to partner with whoever ends up being the winner.
Yeah. Oh, that's a good point. That is a very good point.
It's interesting. It's such a different landscape with Trump as president. I think that investors really need to think about that. Like Tesla's quarter was terrible.
Yeah.
Like they were down after hours. They weren't as profitable last year as they were the year before. Musk comes up. He starts talking about his relationship with Trump. He starts talking about, self-driving taxis and all that. And all of a sudden the stock recovers, as he's doing his conference call, which I find interesting. But, I'm part of that. I'm part of that. Like, I want to be in Tesla when they announce whatever they're going to announce that, whatever regulations. I mean, like it's not, so it's almost detached from the stock price at this point. I mean, like Tesla's stock price is detached from Tesla.
There's a premium you're saying for the name, for the brand.
Well, I'm just saying like it's an investment in Elon Musk more than it is an investment into Tesla.
That's a very good point. I think you're totally right on that.
Yeah, I mean, and we'll see. I mean, this next week we have Palantir on Monday. Mm-hmm. Oh, my fingers are crossed on that one.
Yeah.
Palantir on Monday. We have Google on Tuesday and Amazon on Thursday.
Yeah, Palantir. Tell me how much you like that company again.
I like it a lot. I do.
His interview today, Alex Karp's interview today was really good.
Yeah, I think they are very, very well set up with what's going on right now.
Yeah.
I mean, in a lot of areas.
I think what is a big driver for them, and you'd have to work in tech to kind of see this, but the talent that they attract, and where they attract it from. So, I mean, we talked about the other one, Meta, Google, and Palantir there's been flocks of talent, like real talent from good companies that have joined on board over there. And it makes total sense because the good talent, where do they want to be? Where there's growth.
Yeah, they want to be at the best companies. I mean, you look at just what they can do on the corporate side, what they can do on the government side. I think they really are set up for the next 5 years. I mean, I don't know about this quarter. I don't know how Monday's going to go. I don't know if the market's going to be, the expectations where they're at or whatever. But it's one of those where I'm like, I'm holding it for 5 years and I just want to see what happens. Mm-hmm. Like, I really just want to see what happens because it matters. And so we'll see. Same with Google. I think Amazon will have a good quarter. I think that they're doing a good job. They're set up well. I mean, they're working on their own chip. Amazon is working on so much stuff that that most people do not even realize.
Well, they have what do they call that? They have I think they call it like customer zero strategy, where they look at whatever their line items are for what they like, just what they spend money on, and then they create a business around it.
Yeah.
And I think they call it customer zero strategy.
Yeah.
Where that's how they started it in the US.
I think that, I'll give you this because we didn't talk about this, but like think about a company you think that got beat up that you think could do well, like that because of what happened on Monday. I didn't give Cameron any warning on this, but I look at like Oracle. Yeah. Like Oracle's what I'm thinking about. Like Monday it was 189.
That's a sneaky company.
And then now it's like maybe it's 170, but it was 189 on Monday. I mean, I don't know where it closed today. But they signed the deal with, they were up there with Trump on the Stargate announcement for $500 billion. They got absolutely drummed on Monday. They don't report till March. So you're not going to get to hear from them for a while.
Yeah.
But that's what I'm looking at going, man, maybe that's one that, could possibly do well.
Oracle's a sneaky company.
Yeah.
They really, I mean, I feel like they've taken a lot of market share because they have this ERP software that they sell.
What's ERP stand for?
Enterprise Resource Planning. It's like, if you think about, I'm not going to say the brain, but it's kind of like, it's a vital organ for a business. Like it's
for the technology of the business?
For everything, for the financials. Okay. ERP, like it's like everything that runs through a company, whether it's like financial numbers, supply numbers, like stuff like that. Think about it's basically the chalkboard for all that stuff. So all the company planning goes through it.
Okay.
And previously SAP used to own that market. They're a German company.
Oh yeah.
But they've been losing a lot of market share to Oracle. Oracle's coming in and they're really picking it up. And that's just one part of their business. They have, they have the NetSuite, they have all this other stuff and they're really taking advantage of a lot of the trends. Like they've been building out Austin, their Austin office.
Yeah.
You go to Austin, it's Tesla and Oracle.
Yeah.
Like that's who you meet. People my age, that's where they work.
Yeah. The other thing too, the businesses that do well are the ones that can have something that's their base, right?
Yeah.
So you think about like this is their base. This is what generates a lot of cash flow for them. And then they don't just sit on that, but they take the money that they're making and they go reinvest it somewhere else. And those are the companies that thrive later on. Like they literally they build that thing up and then they take a chance on other things.
They de-risk.
And
they're de-risking.
They de-risk. So today is last day of January, which is nuts. I don't know. I feel like January just like came and went.
Yeah.
So we'll switch to like personal stuff here. But how's the training going? So we got like 3 months.
Yeah.
Wait, February, March, April. We got 3 months till London.
I don't even know.
3 months till London. So how's the training going?
Pretty good. I was gonna say phenomenal because I actually am enjoying it, but I'm in a spot now where I gotta like lean in because I signed up for 2 half marathons that are back-to-back weekends, and those are 2 weeks away.
Yeah.
So I'm like kind of in the, I don't know, I'm in the tough time right now.
Yeah.
Where it's a lot of miles and it's also just a lot. So I'm enjoying it though. I'm enjoying running much more now than I ever have my entire life. And
why do you think that is?
I was thinking about it today on my run. There is the compound effect, man. That takes over. That takes over. And I was running back. I was on the second half of my run. I'm thinking, this is so good. Imagine if you applied this compound thing to every other part of your life. How good you'd be.
Yeah.
So
how many? I think I ran 91 miles in. Or no, actually, I didn't do today. So like 96 miles is what I clocked in January.
Oh, I have no idea.
Yeah, I think 96 miles is where I'm at, which that'll go up. But I like it's kind of neat to track it. But yeah, like it. Well, it's also an anchor to your day, right? Like
when you start your day.
Like, yeah. Like you and I talked about when you don't run, like you have off days and stuff, but you kind of miss it.
Well, the other thing too, I think why I'm enjoying it now is I'm not dying on every run. Like now I'm
because you have a base.
I have a good base. I think I want to get faster.
Yeah.
So like,
have you tried roller skates?
No. Is that what you've been doing?
Yeah.
Is that how you getting the 91?
I get those sneakers that have like the skates in them. Remember the kids used to use?
Yeah.
I try to use those without people knowing.
Oh, okay.
It makes it a little bit faster.
That's funny. Yeah, I don't even know how many I've done this month. I have no clue, but it's probably a good amount.
It's probably about the same. We're on the same plan. It's got to be pretty close.
Yeah. Well, when you tell me you're going to run 10 and then you run 8 and I run 10, I'm picking up a few more than you.
Yeah.
Oh, there's the competitive side a little bit.
Yeah, I'm excited, man. I'm looking for I am looking forward to that run in London. Like I am really looking forward to it.
Yeah. I think it's going to be an experience.
Yeah, it will be for you. Like, so I should say this. I'm looking forward to my run. And I'm looking forward to hearing about your run because there's nothing like your first marathon and like you are diving in so much because like we're doing a world marathon. So the number of people is just when you run with that many people, it just presents a different challenge because it's just so many people. When you run with 50,000 people, like it is just a whole different deal than like I don't know, my first one. I don't know how many people did it, but it was like maybe 6,000 or something. I mean, it's just different. So I posed a question to you, which was, what attributes do you think people exhibit that is like self-sabotages themselves?
With their goals in general, or
just life? It doesn't have to be their goals. It could be just life. I can do mine first if you want to think about yours.
We can go one at a time. I'll do one, you do one, that kind of deal. Okay. This one is top of my mind because I tend to do this, but you overanalyze things. Mm-hmm. You map out like something like a study plan, like over the next 2 months, and then you don't stick to it, and the whole thing's shot 3 weeks in.
Yeah.
So you overanalyze things, or you overplan.
Can we just say, like, we have to tell the audience, Cameron and I are a lot alike, but we are complete opposites in this regard.
Yeah.
Cameron really loves to plan things out.
It depends on what it is.
Yeah.
Because when it comes to like I don't even take that many vacations, but stuff like that, I'm not that great at planning stuff or like planning out anything outside of my Monday through Friday is pretty non-existent. Right. But like during those, anything with work related, I plan out pretty good.
Yeah.
But I've always been that way.
Yeah, I mean, I'm a planner too, but like you think I just jump out of airplanes. I mean, but most people are thinking about stuff, and I think about it and I do it. Like, I mean, I am done by the time somebody has like basically thought about something.
Yeah. Do you want to tell them about the 17 thing with the mic volume? That was a good example of you just jumping out of a plane.
Yeah. So well, they're not gonna. I mean, I just pick numbers out of the air. So my thing about some place where people self-sabotage themselves is entitlement. I think
that's
entitlement is a very big one where, and I know that like you're younger and everybody says that younger generations are entitled. I'm saying this to anybody who's listening. Like it is not a young person thing. Like I have taught long enough. I have dealt with enough older people, younger people. Like there is entitlement across every single generation. It is not a generational thing. It is a human thing.
Yeah.
Where I feel like people will get to a certain level and they think I'm entitled to this, or a young person will think they're entitled to this because they did something. I just think that like entitlement is just a absolute crucial thing to keep yourself from doing. Like, I was thinking about this on my run this morning, actually, where like I deserve this because I have worked in this industry for so long, or I deserve this because I've worked out for a long time, or I deserve this because of this or that or whatever. And I think that is such a toxic thing to tell yourself. Yeah. Like I was on that run today and I'm thinking to myself, like, I don't deserve anything. Like I got to work for it every day. I think about like my investment practice, our investment practice, all those things. I teach people every single day that I know want to have what I like, and they will eventually surpass me. I hope they do. Like, I mean, it's the reason I teach. Like, I hope that one day they eventually surpass me, and that they go above my success. Like, that's the whole reason I teach. Like, I want to be the mentor that I wish I had, that kind of thing. But man, I'm gonna make them work for it. Like I want to stay ahead of them as long as possible, but I mean, I think that like, so I start off every day thinking about like trying to stay ahead of those people. Yeah. Basically like other students that I've had, like I want to stay ahead. Like I am not entitled to everything. And I think if you remind yourself of that, it's one of the ways that like, as you get older, you get more success, complacency comes in, and you have to basically be like Amazon. When you look at Amazon's earnings reports, at the end of every Amazon earning report, they have the first one, and they remind themselves like it's day one. Yeah, like this is day one at the company. We gotta, because it's like that's hard for old companies to do. It's an old company. You look at like the mindset of an old company versus a startup, completely different. Oh my gosh. So we're talking about Palantir, right? Yeah. If you put Palantir employees over at IBM, they'd last a week.
Yeah, they wouldn't want to be there. They would take a pay cut and move to Palantir. Yeah. Yeah.
I mean, that's one of the ways, like sneaky investment hack here. If you want to know which companies are growing, look at where college graduates want to go work.
Yeah, I could see that. That makes sense.
So that's mine. Self-sabotage, entitlement.
That's a really good one.
And it also happens for young people. Like young people exhibit it, old people. Young people are like, I don't want to go work at this company. I've been in school. I deserve one of these jobs up here. Like, they think they're too good. I mean, the same thing happens for older people too. I mean, all those things.
Do you think there's a healthy amount of entitlement? I maybe not even entitlement, expectation. Because is that kind of similar, expectation and entitlement? Like entitlement is I'm expecting of something.
Well, like you'll see like employees, like somebody will be like, well, if I had a better position, I would put more effort in.
That was a good voice.
Yeah,
that was pretty good.
If I had a better position, I would put more effort in. It's like, well, what if somebody doesn't come and like give you that better position? Like you got to put in effort in the position that you're in to get the next position.
When nobody's looking too. That's the other thing. But yeah, totally. Yeah. I agree. That's really good. This kind of rhymes with that then. I was thinking about this morning again on the run. Which run that is like,
it's like meditation, man.
I had no idea. You got some problems you got to work out. Go hop on the trail, no headphones. You'll get some answers by the end of it.
No, I mean, like, but you have to think about like your generation. And I know I'm kind of cutting you off here, and not just your generation, every generation, but most people don't spend 5 minutes a day alone with themselves without some type of like, you know, input, music, podcast, but keep listening to this one, TV show, you know, whatever, like just having like 5 minutes of just like thinking time. Like people don't, and I'm saying like people don't give that to themselves. Like, you know, like you deserve that. Like you need to have some time to just sit by yourself and figure some things out.
I agree. I've learned that in the run for sure. The one that kind of rhymes, I don't know how you'd characterize this, but I was thinking about it. It's like you start looking at things as like burdensome, like whatever. So there's two examples that I thought of this morning is that I was running and I was like, instead of, you know, there's two ways I can look at this. Like, oh, I got to do 5. This sucks. Like, why am I doing 5? And then there's the other part of me was like, I get to do 5.
Right.
Like, imagine if I was sick today, or imagine if I like, knock on wood, twisted my ankle or something where I could no longer do this. That would suck. And then the other one was like work. I was thinking about, just because it's a busy season right now with everything, right? That I was like, oh, you know, there's two ways I could look at this of like, okay, I have this long to-do list today and it's going to suck. Or like, I still get to work and do all this. Yeah. Like, it's not a burden to me because at some point, eventually, when you get older, you no longer have that option.
Right.
Or you have external pressures that are, you know, things, family, certain stuff, whatever, that is no longer allowing you to do all of what you want to do in a workday.
Correct.
And I was just thinking in my head, I'm like, man, I've got to take advantage of what I have right now.
Yeah. Yeah. The switching from burden to opportunity, I think we all get into that sometimes where it's like, man, I got to do this. I've done it. Like, man, I got to teach today or whatever. There's so many people who would love to have, you know, to be able to teach like I do, you know? So, I mean, like flipping the switch and being like, and that was, I think when we did our like New Year's, I was like, man, I get the opportunity to run London or whatever. Cause there's so many people who are my age that don't like to still be in shape, to still be able to do these things. And to look at it as like, yeah, man, it's an opportunity. Like I've put myself in a place. And I mean, it's just kind of that thing where just having a little grace for yourself. And then obviously just the perspective of, man, I'm getting to do something that I really like to do. You know, and not everybody gets the opportunity to do that. I mean, and you're kind of in an interesting age now where you really like being in, you know, your mid-20s. I so wanted to say late just to make you mad.
Just to mess with me.
Just to mess with you. But being in your mid-20s, like you were at the age where you don't realize it yet, but this is where people take a rock, they throw it into a lake. You see the ripples from the rock. And like you were starting to see that happen where the people that you know, the friends that you have, they start making choices and they don't realize how much it impacts their life 20 years in the future. And so you see like, what are the mistakes that somebody's making, or just the perspective of somebody who starts to invest.
Compound. Yeah.
The compound effect of starting to invest versus not, exercising versus not. I mean, the person they marry versus the person they should, you know, not, you know, like all of these things in your mid-20s, like it matter, like it is crucial.
Oh yeah.
No pressure.
No pressure at all. Yeah. I think about how this is, because I'm single, I don't have kids. Like I get to be selfish with my time.
Right.
And I get to invest it as much as I want, where I want.
Yeah.
So it's like, if I want to work 12 hours today and or just study up on something, I could do it.
Right.
That's a gift.
Yeah.
Take advantage of it because, you know, and this is the competitive side, but your competition, whoever you're trying to compete against, some may not have that. Right. So, you know, you have it now. Yeah. Take advantage of it.
And you might not always have it. And that's the thing. It's like, but there's a lot of things that we talk about that are easy to do. I'm not saying they're easy, but you can choose to exercise, not. You can choose to invest, you can not. You can, it's easy to do, easy not to do type of deal, right? But it has to be a conscious decision. And still, I think about Coach Saban. You're either going to live with the pain of discipline or the pain of disappointment,
Okay.
or regret. I mean, but it's either one, right? They're the same. It's which one do you want to deal with? Because you're going to deal with one or the other.
Yeah. Yeah. I think I may have brought this up on a podcast. I don't know if this is going to be repeat, but I used to work for a guy that said you go into Friday leaving the week and you either feel like a turkey or you feel like an eagle. And, the one that feels like a turkey is the one that maybe didn't make the amount of dials that he set out or she set out for themselves, or didn't, prepare for the meetings, crush the meetings like they wanted to, whatever it is. And then the eagle is one where it's like, no, I showed up and the first thought I had of whatever I needed to get done, it got done right then.
Right.
There.
Yeah.
And then you go into the weekend and you get, you know whether or not that was a good week.
Yeah.
So do you want to feel like an eagle or do you want to feel like a turkey? And I heard that and I was like, that is great.
Yeah, there is. Like I forgot who said this, but it was like you win the day, you got to win the day, win the week, win the month, win the year. You got to win enough days to win the week, that kind of thing. I mean, you got to come up with whatever it is for you that holds yourself accountable. It's so hard for people to hold themselves accountable. They want to hold everybody else accountable. They don't.
It's easier.
Yeah,
it's easier.
It is. Yeah, I mean, it is. It's hard. Like it's hard to make those decisions. So, all right. So we will close it down. You got anything else to say?
That's it.
Well, let's see what happens next week. Hopefully it'll be a good week. We didn't even get to the Fed, which is actually a good thing.
We didn't.
Are
we at 40 minutes already?
No, yeah, we're already at 40 minutes.
Okay.
But I'm I'm ready for the Fed to not be the topic of conversation. So maybe we'll come back next week. Let's do another one of these this week or next week, and we'll talk about the company earnings. But all right. So as always, this is pertinent. Don't mistake activity for achievement, and we will see you next time. Thanks, everybody.